Well, markets usually don't like revolutions, especially in the Middle East. But the initial reaction to the resignation of Egypt President Hosni Mubarak and the stunning success of the Tahrir Square uprising was positive, not negative. Here's Jayne Edwards with the details.
Thanks, Alan. Events in Egypt caused a rally on Wall Street on Friday, with the market hitting a 2.5-year high and giving us a good lead-in for our local market tomorrow. News of the resignation of Hosni Mubarak gave a boost to equities, while dampening down oil prices, with US prices falling 4% to a 10-week low.
So the US market overall, throughout this whole crisis, actually held up extremely well. And if you would have asked me what would the reaction be, I was shocked that we did so well. So now that it's improving, it's got to be great for the market.
Turning to world share markets, and all posted decent gains through the week, although uncertainty over Egypt on Friday helped to keep a lid on our local market. With more, here's Tom Elliot.
Well, as you've just heard, the Australian share market put in a solid performance for the week. However, we are at the start of the results season, so let's have a look at a few of the bigger ones. Now, Rio Tinto broke all of its own records, recording a massive $14 billion profit for calendar year 2010. The company is also involved in a friendly takeover of Riversdale Mining, a West African coal company. However, that takeover got interesting during the week when Brazilian steel giant CSN lifted its stake in the target to almost 20%. Watch this space. Boral shares were up strongly. The company beat analysts' expectations. And, of course, many people are also looking forward to the reconstruction impact and what that will do to building products companies like Boral when all the flood victims inevitably have to rebuild their houses later on in the year. The two big commercial banks to report during the week, Commonwealth and NAB, generally beat expectations, and overall banks were a lot stronger over the week on the share market. The one exception to this was, of course, Macquarie Bank, which was down, but it needs to be pointed out that Macquarie Bank is an investment bank, whereas ANZ, NAB, Commonwealth and the like are trading banks and therefore very different. Shares in the Australian Stock Exchange got a big push upwards. Now, what's happening overseas is that all sorts of offshore exchanges are looking to merge. We've got the London Stock Exchange looking to merge with the Toronto Stock Exchange. We've got the Deutsche Börse looking to merge with the New York Stock Exchange. As a result, this probably increases the likelihood that the Australian Stock Exchange and the Singapore Stock Exchange will be able to complete their merger. However, this one is very political. Telstra shares also had a pretty good week. Now, the company's profit was probably below expectations. It did fall. However, it is growing its mobile customer base at a faster rate than previously thought. And finally, Asciano shares, they were up strongly, but it was for slightly sad news. That is, if you're the company's former CEO, Mark Rosetorn, who got the sack during the week. Winner of the week is Jabiru Metals, up 26% after receiving a friendly takeover bid from Independence Group. Loser of the week, however, is Myer, down 14% after unveiling yet another unexpected profit downgrade.